Good evening from here in New York. Ohayo gozaimasu to all of those joining us in Tokyo, and hello to everyone in between. I'm Joshua Walker at Japan Society. I'm excited to welcome you to a conversation tonight from Abenomics to Suganomics to talk about Japan's economy and its connectivity to the world. We're going to discuss everything from Prime Minister Suga's economic policies, COVID-19 and its impact on the Japanese economy, and thinking about everything that goes between. The last time we had a discussion about Prime Minister Suga, it was on the day that he was elected Prime Minister officially in Japan. Tonight, we're excited to welcome back some of the same speakers from that evening, but we also are doing it on an auspicious day, the day that President Biden and Prime Minister Suga had a chance to talk this morning. I think we're going to have a lot of discussion with the all-star panel we have today. We've got an all-star panel including Heizo Takenaka, Kathy Matsui, Hiro Hyakutome, who's also a Japan Society board member, and you'll get a full description of them from our excellent moderator tonight, who I'll introduce in 1 second after I simply say thank you to our sponsors for the business and policy program here at Japan Society that makes everything possible, Citi and Deloitte and Mizuho Financial Group and Toyota Motors in North America. So without further ado, let me turn this over to my good friend Jake Schlesinger, the senior Washington correspondent of the Wall Street Journal, and he's not a stranger to Japan. He's the former Tokyo bureau chief. So Jake, thank you again for moderating tonight. Let me turn it over to you.
Oh, it's my pleasure. Thanks, Joshua, to you and the Japan Society for all your efforts and creativity in keeping us connected and informed during these strange and trying times. And thanks also to the audience for joining us wherever you are. Our plan here is to take a closer look at the Japanese economy, the transition from Abenomics to Suganomics, where it's come from and where it's going. I want to stress that despite the virtual format, this session will rely heavily on engagement from all of you, the audience. We've already had a number of fantastic questions submitted in advance from people registered to attend. I've got those printed out here, and we'll make our way through as many of those as possible. We're also taking live questions via the YouTube chat function, and we'll do our best to get to those as well. I'd like to start by observing the obvious, that the recent past and present in Japan, as in most everywhere, has been pretty bleak. COVID cases rising, albeit nowhere near the scale we're seeing here in the US, and shutdowns renewed. The Bank of Japan last week said the country's economy would shrink by a sharp 5.6% in the current fiscal year ending in March, an even darker projection than its prior forecast. And yet, at the same time, the BOJ raised its outlook for next fiscal year to a healthy 3.9% expansion. So perhaps we're seeing the light at the end of the tunnel. We're fortunate to have with us to sort through all of this an all-star roster of experts, as Joshua had mentioned. I know they're all well known to you, so just to introduce them briefly. From Tokyo, we have Heizo Takenaka, a professor emeritus at Keizo University, chairman of the Persona Group, a man widely portrayed as an economic brain for the two most consequential Japanese prime ministers of the 21st century, Junichiro Koizumi and Shinzo Abe. He's also serving on the growth strategy panel for the current prime minister, Yoshihide Suga. Takenaka Sensei was also just this month named as one of 20 eminent global thinkers to the United Nations High-Level Advisory Board on Economic and Social Affairs. Also from Tokyo, Kathy Matsui, who has just ended a distinguished quarter-century career at Goldman Sachs, most recently as vice chair, Goldman Sachs Japan, co-head of macro research in Asia and chief Japan equity strategist. She's about to launch a new venture, which I'm hoping she'll tell us a little bit about. Kathy is one of the most respected analysts globally on Japan and the Japanese economy, and she's seen as a pioneer in the area of Womenomics, which became a central aspect of Abenomics. We've had a lot of questions already from the audience on that topic, and we'll get an update from her on that. And last but not least, Hiro Hyakutome, live from New York. He's managing executive officer and CEO of the Americas for Sumitomo Mitsui Banking Corporation. He's a 31-year veteran of the company, but has spent 2/3 of that time here in the US, making him a dean of the Japanese business community in the States, an important commercial bridge between the two countries, and one of the most astute Japanese observers of the American economy. Having spent time as an exchange student at the University of Wisconsin and receiving his MBA from Northwestern's Kellogg School, Hyakutome-san is also a devotee of Big Ten football and basketball. So the topic, as I say, the main topic tonight is the transition from Abenomics to Suganomics. So let's start there. We have an audience question asking basically, what is the major difference between the two? Before we get to the substance of that, I want to make it a touch personal. And I want to start with Takenaka-san in Tokyo. You know both men quite well. Give us a bit of a compare and contrast between the two. What's it like to meet with each of them? What's it like to go drinking with each of them?
Well, thank you very much for raising a very interesting question, but it's a very difficult question, naive question, honestly. Well, in my understanding, both former Prime Minister Abe and current Prime Minister Suga are reform-oriented persons. And he had a very strong power to control the bureaucrats. As you know, the policy-making process in Japan is still strongly controlled by the bureaucrats in Kasumi Gaseki. In that sense, both prime ministers can manage quite well with this bureaucratic system. Well, in the case of Prime Minister Abe, former Prime Minister Abe, he was much more interested in the national security issues. And of course, he was very much interested in the amendment of the Constitution, although it was not completed. On the other hand, Mr. Suga, Prime Minister Suga, is much more interested in the economic aspect regarding the reform. And also, Mr. Suga is very much interested in destroying the kind of sectionalism of the bureaucrats. So in that sense, we are expecting a lot. Actually, Prime Minister Suga is going to establish a new agency, a digital agency. This will provide a cross-functional effect to break the sectionalism among ministries. Of course, there are so many differences others, but anyway, this is my basic observation.
So we'll get to that in more detail in a little bit, but just in terms of personality differences, what would you say is the biggest personality difference between the two?
Okay, this is my private observation. Mr. Abe is, when we have dinner with him, he's very talkative. He speaks a lot about the policy-making process, etc., etc. Mr. Suga is a relatively quiet person. He came from the northern part of Japan. He was born and educated in the northern part of the local cities. He's a little bit shy person compared with Prime Minister Abe. I'm sorry, this is my personal observation.
All right, and in terms of, is there anything that you would say, and again, we'll get into the digital agency differently a little bit later, what the main differences between Abenomics and Suganomics? Is there anything you would highlight there?
Well, all of a sudden, former Prime Minister Abe had to step down because of his health problem. And Mr. Suga was elected as the Prime Minister just as the emergency situation. So basically, Suganomics is succeeding the important part of Abenomics. However, in the case of where Mr. Prime Minister Suga, he's stressing the importance of deregulation at this moment. Well, former Prime Minister Abe also stressed the importance of deregulation, but in the first half of his prime ministership, he was quite interested in that. But in the second half, he had to be careful of some political issues. So the momentum of the reform and the deregulation has a little bit declined. So, but in that sense, basically, Suganomics is succeeding the basic structure of the Abenomics. Especially, this is true for international diplomacy.
Kathy, I'd like you to take a crack at that as well. You've obviously observed both closely. What do you see as anything as differences between the two?
So when Abe first, well, this is his second administration, when he emerged on the scene in late 2012, I recall in my former life, many foreign investors getting so excited about finally we're going to have a game-changing, reform-minded leader in the country. And investors around the globe were so anxious and excited to buy Japanese equities. There was a lot of euphoria about the prospect of change. And if I contrast that to the inaugural period surrounding Suga, and of course we've got the COVID pandemic, so it's very difficult to draw any parallels perhaps, but I would say expectations were extraordinarily low relative to the heightened and euphoric expectations surrounding, Abe's administration that began in essentially 2013. And this is also reflected in positioning, I call it, of investors in the Japanese market who are overseas. Back in 2013, 14, 15, allocations to Japanese equities, for instance, was very high. Contrast that to when Suga arrived on the scene, people were extremely underweight Japan. Japan was not really, from an investment perspective, on the radar. And this is just my personal view, but I believe that it's not as if Suga just appeared. I kind of describe it as a Batman Robin kind of situation, where if Abe was Batman, then Suga was Robin. But more than Robin, I think it's important to note that he was extremely effective and had actually achieved a very strong track record of reform, even when he was chief cabinet secretary under the Abe administration for basically almost 8 years. So things like inbound tourism really took off, was a large part, a lot of his work. Allowing unskilled foreign workers to come in and apply for longer term visas. Furusato Noze, this special sort of tax incentive scheme to encourage donations to rural areas of the country. Reducing mobile phone charges was also not an easy task, but given that Japan's charges were relatively high in the developed world, he kind of pushed the telco industry to drop those charges. So I think from my vantage point, maybe Abe, of course, when Abe started, he also inherited a very tough economic situation. The number one goal, I think the primary immediate goal back in 2013 was getting Japan out of deflation, right? So the three arrows, that very macro focused approach of quantitative easing, of fiscal stimulus, a lot of emphasis there. Whereas now, I think under Suga, my perspective is that it's not as if macro policies aren't necessary, but it's just continuation of Abe's macro kind of framework. But as Takenaka Sensei said, a real more micro focus, I think, with respect to Suga when it comes to deregulation and tackling, I know we're going to discuss later, a lot of the more micro focused issues, which still need a lot of work.
Great. So I do want to now delve into some of the specific areas that he's talked about. And one that it's been a long time goal for many in Japan is to make it more of an Asian regional financial capital. We had two questions from the audience that touched on that. One was asking, do you think that Tokyo will be a financial hub in the future? Another person asking, does Japan seriously consider itself the next Hong Kong? If so, what has it done to attract capital and minds to its shores? Now, Hyakutome-san, I know that's a subject that you've spent a lot of time thinking about, and would love to hear your thoughts on the prospects of Japan finally actually making inroads, especially as Hong Kong is increasingly challenged.
Yeah, my first observation is that Japan is already an international financial hub. So again, as an international financial hub, whether we consider Hong Kong and Singapore as regional financial hubs as opposed to international financial hub is a big question. Now, there is a statistic and a survey done by a private company to rank which cities are better financial centers. And last year's ranking says Tokyo is actually number 4 behind Shanghai. And I again, from a Japanese financier's perspective, I think this is a little biased. So I think Tokyo does have a strong infrastructure, financial institutions, strong investor base. But what I really think Tokyo would need is a stronger investor appetite, the risk-taking mentality of the Japanese financial wealth. And I think that's going to create Tokyo a stronger financial hub going forward.
And do you, people have talked about Japan being more risk-oriented for a very long time. Do you see anything in Suga's platform or anything happening that might change that balance a bit?
I guess the key is that I think, unfortunately, Japanese people, particularly my generation, I'm 55 years old, my generation doesn't have a good experience of investing successfully. And I think the key thing is the younger generation and the government incentive to make people invest more. And it isn't really Mr. Suga's policies, but under Mr. Abe, we have this NISA, Nippon Investment Saving thing, and that's a tax incentivized investment structure. And I was told based on recent surveys that the younger generation of Japanese are investing in equity instruments. And so we are hoping that the Japanese people find better ways of utilizing their financial wealth. And I think that's going to create financial institutions stronger and convert Tokyo into a much stronger international hub that has a strong connection to Asian regional hubs.
Although, as we were talking a little bit beforehand, young people in the United States are very excited about investing, and we saw today, just the last few days, this crazy run up in the GameStop stocks. It's really hard to imagine Japanese regulators tolerating something like that. So I'm assuming folks in Japan look at that and think we need to strike a better balance there.
Right. So again, if I may continue a little bit, I think everybody knows that the Japanese household financial asset is huge at $18 trillion. But again, this has only increased by, I think, 40% over the past 20 years. And in the US, it's around $90 trillion, and that has increased over 3 times over the past 20 years. I think there are 2 major reasons. Number one is in Japan, over 50% of that is going into savings, cash savings as a deposit instrument, and only 15% go into what we call risk investments, whether it's a fixed income instruments or mutual funds. In the US, only 15% is in deposit and almost 55% in risk instruments. That's number one. Number two is obviously Nikkei hasn't performed as well as the markets in the US. So again, if we have a very active equity market like the US, obviously people invest more in equity, and then that's going to create more national wealth. So I think, Japan fortunately already has a significant financial wealth, and that needs to be better invested. And I think that's going to revitalize Japanese strengths as a financial center and as a country.
Got it. So I did want to get back to the digital agency, because that is one of the signature priorities of the new Prime Minister. We do have an audience question that says, digital transformation has been a focus of many administrations. Is Suganomics different? Would he be able to create a real difference to Japan's economy and society? And I wanted, before turning it back over to the discussants, just to cite an interesting piece in Toyo Keizai recently by my good friend Rick Katz, who I believe is actually watching here tonight, so I'll give him an extra shout out. He's a longtime astute observer of the Japanese economy. And the piece had some remarkable statistics that I wanted you guys to react to as well. It says, and I'm quoting from the piece, among 34 rich countries, Japan ranked 25th in overall digital competitiveness in 2020, according to the IMD World Competitiveness Center. In an OECD study, Japan came in last among rich countries in how much growth it gets from every dollar invested in what's called knowledge-based capital. So clearly there's a hole to dig out of. Takanaka-sensei, I know you've thought a lot about the digital progress in Japan and this digital agency. Tell us what that's about and whether you think it really changes anything.
Well, this time we are still struggling under COVID-19 crisis. Under such circumstances, for example, many people felt the strong need for the further digitalization. We have technology, we have human resources, we have capital. Still, for example, please take a look at the case of the remote education, online education. It couldn't be taken in Japan. Why? Because of regulation. We have technology, we have IT equipment. However, according to the Ministry of Education, this online education cannot be approved as a formal credit. So this is regulated. Also, this is true for the online medical service. We have a lot of regulations. So this digitalization should be accompanied by the deregulation. So Prime Minister Suga well understand that. And of course, he officially stated that to establish, he asked Minister of Digitalization, Mr. Hirai, and Minister for Deregulation, Mr. Kono, called them to the Prime Minister's office and ordered them to have a weekly meeting to discuss that. So while digitalization is almost equal to the deregulation. So this kind of aspect is very important. So at this moment, Prime Minister Suga is very eager to realize this real digitalization in this society. At the same time, we have to consider another aspect of this digitalization. We are now in the process of to move to the so-called 5G from 4G technology base. So now in the 4G basis, all people are connected to the internet. However, in the age of 5G, all land, Japanese total land should be covered by internet. Still, as far as the land space is concerned, only 60% of this land, total land, is covered by internet. So network. So we need another kind of infrastructure investment. So Mr. Suga, our Prime Minister, is very eager to realize this kind of establishing a new type of infrastructure, internet infrastructure. These both things are needed for the real digitalization in Japan.
So another priority for Prime Minister Suga is green energy and decarbonization. And one reason I know that Rick Katz has been watching us is because we have our first question from YouTube. Says, what is the political, and it's from Rick, saying, what is the political feasibility of Suga's goal of zero net carbon by 2050 if he survives and if he fails? Kathy, I know you've spent a little bit of time looking at that, and I think Hyakutome-san has as well, and I wondered if you guys could both address that.
Sure. So I'm by no means an environmental climate expert, but just sitting here in Japan, and I remember when Prime Minister Suga made that announcement of carbon neutrality by 2050. So essentially, reaffirming the Paris Climate Accord. I think that was quite surprising from, at least when I was sitting in the markets, by a lot of investors, not just overseas, but actually within Japan. Whether there was 100% consensus built domestically before that announcement was made, is unclear. But of course, I think from a long-term sustainability perspective, a lot of people applauded this very bold, decision. So that's a good thing. Now, the challenge, obviously, is how on earth is Japan going to achieve that goal when it is itself a resource-poor nation? But I think the keys will be, two things. Number one is the need for massive investments in innovation and clean or climate tech technologies. I do think that Japan actually has some of these technologies, but to nurture and grow them to a scale that will be impactful on a national basis is still, I think, a long ways away. So to what degree can the government promote the scalability and expansion of these new technologies and innovative technologies, I think, is number one. Number two is we obviously need to change behavior of the energy consumers, whether they're corporates or individuals. Does that require subsidies? Will that require economic incentives for people to shift their behaviors, whether it's transportation or home consumption of energy, all of these things. So I think those are two big areas that probably need to be very carefully. I know that they're thinking about these things, but to me, those are going to be the two key areas if we are going to come anywhere close to that neutrality 2050 target. And of course, the private sector has an enormous role to play as well.
Great. And Hyakutome-san, is that something you want to jump in on?
Yeah, so I guess my view is that from as a banker in New York, I think I'm amazed how speedily the Biden administration is improving the U.S. government's position on environmental protections and the climate change. So I think what the Japan needs to do is to make sure that we'll keep up with the United States. I think the speed in which this government, the Biden administration, will try to, again, they have announced to come back to the Paris Accord, and we are seeing, I guess, as a banker, a significant demand for green financings and so forth. So again, it is to me, the United States is very serious about it, and I think Japan really needs to keep the pace with the United States.
Go ahead, Takanaga, please jump in.
Okay, may I raise some aspect of this problem? Well, honestly speaking, Minister for Environment, Minister Koizumi, were very eager to announce the carbon neutral by 2050 for a long time. However, some business leaders and also Ministry of Economic Trade and Industry have been strongly against for that. And all of a sudden, Prime Minister declared this carbon neutral in the Diet speech. And since then, very interestingly, the attitude of Ministry of Economic Trade and Industry changed a lot. And also the other day, in the third supplementary budget, the government provided 2 trillion yen of the green fund. This is now controlled by METI, Ministry of Economic Trade and Industry. They are now acting something like the main actor for this digital, carbon neutral. And a very interesting, important point is whether in Japan, so-called carbon pricing is approved or not. Still, main business leaders are, in my understanding, are strongly against that. Because carbon pricing, of course, includes the carbon tax issue, et cetera, but they are very nervous about still the current high price of energy. So, well, I believe the carbon pricing issue will become a very controversial issue.
Well, that, I'm sure you know, that's also a priority for a lot of supporters of President Biden, although he himself hasn't endorsed that yet. And so that'll be an interesting debate, I think, in both countries and around the world. I wanted to, as I mentioned at the outset, make sure before we pivot off some of these micro issues, talk about Womenomics, because that is an issue that is of great interest to a lot of our audience. We have 2 questions that were posed earlier. One, just asking broadly, what is the outlook for the women's workforce in Japan? And another is, what would be one of the biggest impacts of Suganomics on gender equity from a Womenomics point of view? What's expected to continue and what's not? What's the focus for 2021? And as I said, we have the world's leading expert on that question with us. So Kathy, why don't you talk a little bit about that? Again, give us a bit of an update. Where are we right now in terms of progress? And what, if anything, is Prime Minister Suga doing more than what Prime Minister Abe had done?
Sure. So as many of you know, Japan used to have one of the lowest female labor participation rates in the developed world until a few years ago when Japan's economy was growing, the job market was uber tight, there was a need for maximizing the use of human capital here. And so suddenly Japan, of course, this is pre-COVID, their female participation rate shot up to over 71%, which exceeded the 67% in the United States and the 63% average for Europe. So by numbers, 3.3 million women, additional jobs for women were created over the last 7 to 8 years. The other thing that I think people don't realize is this issue of transparency around gender diversity. So in 2015, a law was passed called the Female Employment Promotion Law, Josei Katsuyaku Suishin Ho. And while this wasn't sort of legally binding, it would strongly encourage organizations with 300 or more employees, public and private, to disclose gender-related statistics and encourage them to set some gender targets or goals. Because it wasn't wholly mandatory, of course, and the companies could choose what data they wanted to disclose. It wasn't perfect, but I will tell you, without this disclosure, GPIF, the world's largest public pension scheme, would not have been able to invest in an ESG-related index called the Women's Empowerment Index, because I know the person who created this index at MSCI, and she told me that unless Japan's companies had disclosed this sort of data, this would not have been possible. So I think it's important to understand that, we say in English, you can't manage what you can't measure. And so I think this is a really big, important step forward. Now, on the other side, what's not happened, of course, we all know that while the numbers are up, the quantity of women working is up, the quality of the jobs are still, not high enough, so to speak. So more than half of women in Japan working outside the home are working in a part-time capacity, not a full-time one. And so the percentage of women in leadership making positions, whether it be the private sector, manager ratios, board director ratios, the Diet has a dismal 10% female representation, which is probably one of the lowest in the developed world. So we have a very long way to go in terms of grooming women. We not only got them working, more than working, but we also really need to work on them, I think, internally within organizations to groom them to leadership positions, which is precisely why, commercial break, I wrote this book called 女性社員の育て方を教えます. That's how I spent time under COVID, and I wasn't on an airplane. But I'm finding that while you can blame the government for not having enough takujisho, childcare centers and convalescent facilities, etc. It's not so much that is perfect. It still has work to be done, but I think a lot more work has to be done within organizations of mentoring women, of helping them draw roadmaps of their career progression, giving them opportunities, platforms where they can shine. That is not something that the government can wave a magic wand and poof, everything will be wonderful. So I'm encouraged, and I also think two things. Sorry. Last things to mention is ESG investment, because it's exploding in Japan, as many of you know. That is requiring managements to actually pay much more heed to gender diversity than they've ever been required to do so before. And as you know, a lot of asset managers are now requiring at least one female on boards of Japanese companies. And second is, frankly, young Japanese men, I call it the millennial male generation, really have a different set of values about work and life. I frankly, before I left Goldman, was almost getting more questions about work-life balance from my young male colleagues than from my female colleagues, if that says anything. So I think that's going to help this whole mission to get more balance, to get more equity in the workplace.
All right, well, so Kathy, as long as I have you in the spotlight and we're talking about women and careers in Japan, I will put you on the spot briefly to see if you can reveal anything about what your post-Goldman life will look like.
Well, I thought about professional dog walking because I'm really good at that, but probably not going to last. So I can't reveal too much, but given my 30-year career in finance, it will have something to do with finance, and whether it's diversity or sustainability or corporate governance, which we spend a lot of time in my career researching, it will have an ESG angle as well. So stay tuned.
And lastly, again, one last personal question for you, since I wanted to pivot to the Olympics, which is a topic of great interest. You're supposed to be an Olympian. Can you tell us a little bit about that?
Not quite. I'm assigned to be one of the torch runners in the torch relay. My date, I believe, is April 12th or April 13th in Naraken, where my parents originate from. But whether that's going to be possible or not, I do not know. But,
okay. But I guess we'll try and figure that out a little bit. In fact, we do have two audience questions on that subject. One is, how likely will the Olympics take place in Japan this year? And one saying that's recently been reported that 80% of Japanese citizens are not in favor of the Olympics moving forward. What are the factors that go into those decisions? Takanaka Sensei, I know you said you've actually discussed that with Prime Minister Suga. Give us your insights as to what the thinking is right now in Japan and what the prospects are.
Well, honestly, I didn't have a direct discussion with Prime Minister on this issue, but I believe, of course, the Japanese government is ready to host the Olympic game, of course. This to be held or to be canceled, this decision cannot be made by the Japanese government. This can be made only by IOC, International Olympic Committee. So, the Japanese government position is in that sense very clear. We want to host that. And on the other hand, as Jake mentioned, according to the public opinion poll, majority of the Japanese people are against the hosting Olympic game. Well, they are very nervous about the COVID-19 crisis, of course. But I believe, public opinion fluctuates from time to time. Anyway, in my understanding, the governments or JOC considering three types of Olympics game. One is very normal, usual type, inviting foreign guests and enjoy the games. The second choice is only a domestic audience is allowed to some under some limited number. And third one is without any audience we can have. So if, for example, major countries like the United States can send the team of athletes, Olympic game could be held, even without any audience. So problem is whether in major countries in Europe and the United States, the COVID-19 crisis is coming down or not. It depends. But anyway, at this moment, the Japanese government and JOC are very eager to host the Olympic Games.
We were talking about this the other day, and you had an interesting observation when I asked you, in some ways, what is the point of holding an Olympics for Japan if you don't have an audience, since it was sold to the Japanese people as a big economic boost? And I thought your answer was interesting when I asked you, like, what is the economic gain to Japan if nobody comes? Tell us a little bit about your thinking on that.
Well, Olympic, Paralympic, this is a very special event because in the case of Olympic game, about 70% of the total world population watch Olympic game in some ways. So this is a very good opportunity for Japan to show its presence. Well, in the past Olympic game, 56 years ago or so, when I was a junior high school student, well, at that time, only 9 days before the opening of the Olympic game last time, Tokaido Shinkansen was opened. And at that time, for example, well, a very famous fashionable street in Tokyo, Aoyama Street was completed. So Olympic, Paralympic game will bring about various kind of changes in the society. Well, even in this case, well, Cassie mentioned the torch race. This torch fire, this is comes from hydrogen this time. So this is a very small technology maybe, but this is the technological progress. So this kind of advancement of the society can be realized through Olympic Games. So in this sense also, still I personally also, holding Olympic Games is very important and would provide a lot of opportunity for the Japanese economy and the society.
You know, we had talked a little bit earlier about the changes in American attitudes of investing in Japan, and I'd like to pivot to that a little bit and to bring Hyakutome-san back into the conversation. And just to set up the question a little bit, as many of you know, in August, Warren Buffett, the investing sage of Omaha, and his Berkshire Hathaway announced that they had spent more than $6 billion taking a 5% stake in 5 Japanese trading companies, or shosha: Itochu, Mitsubishi, Matsui, Sumitomo, Marubeni. And he said he was considering increasing those stakes to 9.9%, his first major investment in Japan in years. I should also point out, for full disclosure, that my newspaper, the Wall Street Journal, reported just a few days ago that, as of now at least, that investment is badly underperforming, largely due to the shosha's holdings in fossil fuels. But that said, what, if anything, does this Buffett investment tell us more broadly about the logic of foreigners buying in Japan right now? Hyakutome-san, why don't you take that on?
First of all, I'm not privy to the thinking of Mr. Buffett, because if I do, I would be in a different business. But I guess Mr. Buffett's thinking, again, generally speaking, my understanding is that the trading companies or Sogo Shosha have many business portfolio that's somewhat difficult for people to understand and therefore relatively undervalued. And I think Mr. Buffett has a very strong interest in energy sector. I think he had recently invested, before he invested in Shosha, I think Dominion Energy, the gas transmission company. So I guess Mr. Buffett has a particular liking to the business holdings of Japanese Sogo Shosha. But generally speaking, particularly with when I meet with the U.S. investors, many of the Japanese U.S. investors are very bullish on Japan, and obviously Japan has a very, again, stable political system, stable society, and then there are many opportunities. In particular, from private equity perspective, they say that Japan has many businesses that are not well invested at the larger corporations, so there's a disposal opportunities. There are small businesses that have inheritance or succession issues, so they want to, they are family companies to be run by professional managers. And so there are many companies, smaller size in particular, who have technologies or technologies that cannot be internationally exported because of lack of capital. So I think there are many U.S. strategic investors looking at Japan as an opportunity. I recently heard that Carlyle is going to spend over $10 billion in Japan. So I think there are many opportunities that exist in Japan for U.S. investors, and I think the stable Japanese society, we don't have a social divide that this country, the United States, is experiencing, and that's going to be a big attraction to U.S. investors and overseas investors as well.
I see a hand raised in the tatami room, so why don't you jump in, Kathy?
Yeah, I think just also taking a bigger picture perspective. I mean, look, it's no secret to anybody that Japanese companies and their shares are very cheap. But I think Japan has frankly suffered for a prolonged period of time of this perception that is cheap for a reason, and that reason being that perhaps its corporate governance standards historically were not quite up to global norms, meaning that minority shareholders' interests perhaps were not being fully protected, whether it's due to cross shareholdings or undiverse boards or this ubiquitous Japanese practice of listing your subsidiaries, your children, and the governance issues that arise from that. And so I think, I've covered Japan for 30 years when the Nikkei was close to 39,000 and PEs were over 60 times. Well, now the PE is 16 times, price to book is 1.2. There's still many companies trading below, discounts to their net cash holdings. So again, no secret that it's cheap, but I think with the emergence of things like the stewardship code, the corporate governance code, note that Pakistan had a corporate governance code before Japan did. So, some clients said to me who are very skeptical. I had a lot of skeptical clients in my career. They said, Kathy, this is like convincing vegetarians to convert to become carnivores. This is never going to happen. It will take 200 years. But I always think back to, some of you know my husband, Jesper, and he's German. And I've done some research on Germany's journey for corporate governance, and very, very similar, right? Not exactly the same, but very tight cross-holding structure. You don't hold shares for investment reasons. It was for strategic purposes, all of that. But look what happened to, the German industrial structure. Cross holdings were unwound. You had the sudden emergence of an M&A market. This is all starting in the late 1990s. And then what happened? Hyakutome-san was talking about the mountain of $18 trillion of cash. Well, you know what? German households back then had more ratio of cash than Japanese households have today. Yet look what happened. Because the German stock market did well, because German companies cared about corporate governance, because their ROEs went up, that's what drew household savings into risky assets like German equities. And so, people say, oh, Japanese DNA or, their lack of knowledge or whatever, financial literacy is very low. No, they are very smart. They are very astute. It's about an economic rational decision. And so if they see that Japanese equities are attractive, I guarantee you, that will attract, this mountain, this Mount Fuji of cash. And I think one other thing that I will add is the dividend yield. Japan is cheap, but frankly, not on a dividend yield basis. If you think about the growth, right? People say it's higher than the United States. Well, I think that the United States probably has higher potential growth in its largest companies than Japan. So Japan has a lot of retained earnings that is yielding zero because interest rates are zero. And so deploying that cash or giving that cash back to shareholders in the form of a higher dividend yield, it should average at least 3 to 3.5, close to 4% in my view, something closer to European levels. That I think would really go a long way in attracting Japanese own savings into its market. Sorry for the sermon, but
that's fantastic.
I have strong views about this topic.
I'm sure you will retain them and keep working for them. I'd like to change the subject a bit, as Joshua had mentioned at the outset. President Biden today called Prime Minister Suga. We've been talking all this time about the transition in Japan from Abe to Suga, but we've of course had a dramatic transition here in the U.S. From Trump to Biden, and maybe when Hyakutome-san was talking about the appeal of political stability in Japan, perhaps that was an indirect reference to signs of instability here. And I wanted to just get a sense, first of all, and bring Takanaka-sensei back into the conversation, to get your perspective on what differences do you think that Biden makes for Japan. We have questions from the audience about how will Biden's administration affect the direction of Japan's economy, questions about whether Japan can bring the U.S. back into TPP. Give us your views on that.
Well, what would happen to Biden administration? I'd like to ask a question to Jake, honestly speaking. Well, what would happen? Well, we have a lot of observations. Well, President Biden is now 78 years old or so, so he will maybe serve only one term. And among 4 years, the second half, 2 years, he will suffer from so-called lame duck. So his active time is only 2 years or so. Considering that, their leadership could be strongly shown to us or not. Some people are very concerning about that. At the same time, we welcome for example, the liberal world order is coming back. Liberal world order. The Japanese economy has been enjoying this liberal world order since the end of the Second World War. Free trade, multilateralism, and globalization, etc. But former President Trump all of a sudden canceled that kind of idea. The United States was a strong rule maker of liberal world order, and Japan is going to be, in a sense, rule shaper of this liberal world order. In this respect, we're expecting a lot where the changes of the U.S. policies, especially, of course, we are waiting the United States coming back to TPP. Of course, I understand there's still very difficult domestic political problem in here, but anyway, Biden administration, coming back to Paris Accord, etc., etc. So in this regard, we're expecting a lot. They were coming back to TPP. Because on the other hand, we have RCEP agreement, including—
Let me just— RCEP is the Regional Comprehensive Economic Partnership.
Exactly, this including China. So in that sense, I really hope so some kind of competition between China and the United States toward free trade. We are waiting or expecting this kind of change under Biden administration.
So let me stay with you for a second, and I'm not going to answer your question because people aren't paying me to answer the questions tonight. They're paying to have you guys talk. I mean, the point you make is an interesting one, which is that I think people in Japan and around the world, at some level, those who believe in what you called the international rules-based order that President Trump attacked, have some relief that President Biden has come back. But I think, again, given the instability and the uncertainties that we've seen, there's a lot of uncertainty about whether that Biden sticks around long and whether that bent has really returned or whether we see a return to Trumpism. Takanashi, tell us a little bit about the perspective in Japan and whether there's a fear that the US is now unstable, whether there's a vacuum, and how does that affect what Japan does?
Well, under the political vacuum is very, risky in many senses. Because we understand the very strong confrontation between the United States and China. Well, when new president appears, there is a possibility that China will, make a kind of test the capability of the new president. And from time to time, we have a discussion on Taiwan issue, of course. Well, even in the case of Hong Kong was, given the status of one country, the two system, one country, but Taiwan is still a part of China. Well, many people are approving that. So under such circumstances, there is some possibility that the Taiwan situation will become a little bit unstable. If so, well, Hyakutome-san mentioned we are enjoying some social stability in Japan. And however, this kind of stability will be damaged negatively, of course, a little bit. So we are concerning this kind of geopolitical factors and the new government. But anyway, we understand strongly the confrontation between the United States and China will continue. The United States is a very important allied country. On the other hand, China is another important trade partner, the largest major trade partner for Japan. Both countries are very important. So we are watching very carefully what will happen under new presidency.
We have a lot of interest in China. We had a question submitted over YouTube from someone asking what's Japan's strategy against China's ever-growing influence across the Asia-Pacific. I'd like to bring the other two panelists in because I know they also have thoughts about how Japan is handling China, the competition between the US and China for influence in Asia. Kathy, you want to jump in first and then we'll go to Hyakutome-san.
So I think at the end of the day, the core geopolitical, let's say, what do you call it, North Star or core to Japan's geopolitical policy remains the US-Japan bilateral relationship, at least for the foreseeable future. Having said that, though, I think that Japan, for the reasons Takenaka Sensei just outlined, which is China has become and will most likely remain a very important economic partner for Japan's economy for quite many years to come, that Japan cannot afford to be have an antagonistic relationship with China either. So my personal take is that I believe Japan will pursue a pragmatic approach in its relations with China. I think that President Xi was supposed to come to Japan, I believe, around this time last year, or maybe just before Sakura season, and it was canceled because of COVID. But perhaps that was sort of an indication of this sort of pragmatic approach. And I think if you speak to most executives, and of course, Hyakutome-san can speak to this, in the private sector, I don't find very many, if any, Japanese executives who think that we should ditch China and go for the United States or other countries, because that's frankly not practical. If you look at a lot of companies' 5-year, 10-year growth strategies, a lot of them do, even if they're domestic companies, have China in there, right? So, and I think one other thing is it's also, I think, not just about China. I think the very good point that was mentioned earlier about RCEP, about Japan really trying to kind of make its presence known, so to speak, and become a leader in the region, particularly when it comes to, I think, Southeast Asia, which, of course, by population, by demographic age, median ages in these countries, including India, it's fantastic, right? The growth opportunity, which is, I think, precisely why that was the first trip or destination that Prime Minister Suga made outside of Japan when he first arrived in the prime ministership. But I think that's really what Japan needs to do, is make friends, right, around the region, and try to continue to maintain a pragmatic relationship even with countries like China, because they're just economically going to remain so relevant.
Hyakutome-san?
Yeah, I agree with Kelsey's assessment that we have to be very practical. Again, as Takenaka Sensei said, that China by far is the largest trading partner for Japan. On a combined import-export basis, I think our trade volume with China is probably 30–40% more than the United States. So again, we are already, China is already within our ecosystem or supply chain network. So I think 3 regions, Japan particularly, have to be paying attention to ASEAN, obviously China and the United States. And again, probably within the next 10 years, China is going to be the largest single market with probably the largest purchasing power. At this moment, the US is the largest single market with the largest purchasing power. So again, Japan has to be very practical to make sure that we balance between the competing ideologies, and hoping that the China will be closer to us in ideology than than going into farther away from us.
And I should note on that point that the Wall Street Journal had a story this week that got a lot of attention, saying that China last year for the first time had passed the US as the leading
destination for FDI, yes.
For FDI. I know that, Hyakutome-san, that's an area of interest to you, and that you do actually get involved with a lot of folks doing FDI continuing in the United States. Tell us just a little bit about the ongoing appeal or challenges of that.
I think many Japanese companies that I talk to are extremely bullish on the United States. And again, I think there are probably 3 reasons. Number one is that the US has a very attractive, high potential growth rate. I think around 2%, where Japan is probably at the potential growth rate. And then 2 is obviously it's, again, as I said, just the largest single market with biggest purchase power. And then the 3 is obviously it's a country with rule of law, attractive demographics, and business-friendly environment. And again, I wouldn't say even, but under Mr. Trump administration, I think the U.S. has taken many measures that are friendly to business, lowering tax rates and so forth. So again, despite the protectionism, I think as a country, as another market, the United States continues to be very attractive to Japanese investors. And we are seeing some recent reports by large Japanese companies like Hitachi, Shin-Etsu Chemical, announcing big investments in the United States.
So I wanted to go for our last segment to the subject that's obviously been on all our minds for a long time, which is the pandemic. We have a question from Tom Kono over YouTube asking, what are the lasting impacts of COVID-19 on the Japanese economy? Aside from accelerated digitization, how much will pandemic transformed Japan in the long run. Maybe Takanaka-san, do you want to take a first crack at that?
Well, from here on, what will happen? It's very difficult, of course, to predict. But anyway, we're expecting, especially political leaders, expecting a lot on the effectiveness of vaccine. And for that purpose, very promising politician, Mr. Kono, was nominated as a minister in charge of vaccine. And this will start from next month. But still, we have some serious problem in the medical sector. Well, we have more than 1 million hospital beds. However, only 3% of these hospital beds are allocated for COVID-19 infected. So we need very structural change for this medical side. Some people are afraid of medical collapse, but this is impossible. We have a lot of huge, rich medical resources, but only a limited part is now used for COVID-19. And from here on, we have some, we face some problems. That one is corporate debt. Corporate debt is increasing very rapidly. At this moment, rating agency leaving rating of the businesses unchanged. So consequently, from the viewpoint of banking sector, non-performing loan is not increasing. However, well, if everything is being normalized, we'll suffer from excess debt of the corporate sector, and in some banks, maybe non-performing loan problems. So we'll have to make some preparation for this kind of midterm problem expected. Of course, for the time being, the Japanese government is providing a huge amount of supplementary budget to cover the economic decline. But beyond that, we'll see some problems. We have to make a preparation for that.
Great. And I think we talked about this before. One of the things you mentioned was, one of the most prominent sectors in Japan targeted for growth has been tourism. Obviously, that's been slammed during the pandemic. Does that recover post-pandemic, or does that suffer a permanent loss, do you think?
Well, it is true that we are expecting the rapid recovery of the tourism-related industry, but of course it depends on everything depends on the situation with COVID-19, and also we do not expect we do not have so optimistic view on that. It will take several years before we see the full recovery of this industry.
Kathy, you want to jump in on this question?
Yeah, I think just a couple of points. One is that Zaitaku Kinmu, or work from home, which was always available as an option for most, I think, at least large companies, but never really fully utilized, has now become the norm in many instances. I was just at a couple of financial institutions earlier this week, last week, and they said max 20-30% attendance in the office, and these are large listed financial institutions. So that raises the question, though, doesn't it, of how are you evaluating performance if it's not on FaceTime or time anymore, spent with each other, but rather on output and performance of that output. So the silver lining to me is from work from home is it's forcing a lot of organizations to rethink and reassess how they do performance evaluation if it's not being physically present together in office. And I think the other areas is what Takenaka-sensei alluded to earlier as the silver lining or a catalyst for change is that the need for telemedicine, the need for digital accessibility and equity for families who don't have maybe bandwidth, don't have laptops, schools that aren't digitally equipped and everything. I think this really the pandemic exposed these vulnerabilities, and hopefully some of these regulations that have been preventing many of these things from happening will get deregulated, and we'll have greater accessibility and equity for more people in Japan.
Great. Well, I'm afraid that we are near the end of our time, and I apologize to our audience for that, because there are a lot of other interesting questions that I wanted to probe with our speakers, including the significance of and the potential reality of really eliminating the hanko. But we'll have to leave that one for another time. I want to thank our three speakers for an excellent and lively hour on the subject. I want to thank the large audience that we have accumulated on YouTube. And just to conclude also by thanking the Japan Society and the sponsors for tonight's event, to wish everybody a safe and happy new year. Thank you so much.
Thank you.